yet again another IPO hits the market, this one being Niva Bupa Health Insurance IPO. In this video, we will cover the business overview, IPO details, market opportunity, followed by the financials of the company, peer analysis, and lastly the valuation. So without any further ado, let's begin. Incorporated back in 2008, Niva Bupa Health Insurance Company Limited is a joint venture between the Bupa Group and Fettle LLP focused on the health insurance sector. Niva Bupa offers a range of health insurance products and services through its website and mobile application. These include diagnostic services, digital consultations, annual health checkups, and health education content. The application also provides insurance claim submission, policy servicing, and tools to track health metrics. And according to Redseer report, they are one of the fastest and the largest standalone health insurer based on the gross direct premium income or GDPI to the tune of 5,494.4 crores in fiscal year 2024. Moreover, they boast of having a massive 14.99 million active clients as of June 2024, leveraging a diversified distribution strategy through both direct and intermediated channels. Moving on to the IPO details, Niva Bupa opens for subscription on November 7th up until November 11th and is set to list both on the BSE as well as NSE. It has fixed the upper price band at 74 rupees per share. So for a retail investor, the minimum lot size would be 200 shares, translating to a minimum investment of 14,800 rupees. Niva Bupa plans to raise a massive 2,200 crores, out of which about 36.36% is towards a fresh issue of 800 crores, while the remaining is an offer for sale, which means the existing promoters and shareholders are selling off their shares. The IPO has reserved 10% for retail investors. Now, what are the objectives of the issue? Niva Bupa plans to use the net proceeds from the fresh issue to achieve a couple of key objectives. Firstly, is to enhance its capital base to strengthen the solvency levels, and second is for general corporate purposes. Now, what about market opportunity and the future trend of the industry? First things first, India exhibits a lower insurance penetration when compared to developed global economies. As you can see on the image, the insurance penetration in India stands at a mere 4%, while the global average stands at 7.1%. Moreover, countries like the USA and UK have a far superior insurance penetration level. Hence, insurance in India is expected to grow rapidly across both life and non-life segments. And again, with the IRDAI committing to enable insurance for all by 2047, this further strengthens the pillars of the entire insurance ecosystem. Now, specifically talking about the non-life insurance, which includes motor, health, travel, fire, marine, and other segments, health insurance is the fastest growing segment, witnessing the health insurance premium doubling in the last 5 years. Now, what could be the reasons for the health insurance growing rapidly? Firstly, there has been a growing awareness of insurance as a protection against healthcare inflation. Then there is a rise in the number of diseases and increasing affordability with customized health insurance products provided by specialized players. Then other factors like public awareness of health risks, high out-of-pocket medical expenses, etc. are all leading to a higher demand for health insurance. This bodes well for health insurance companies like Niva Bupa. As you can see, after growing at a CAGR of 19.5% from fiscal year 18 to fiscal year 24, health insurance premiums are expected to reach rupees 2.4 trillion rupees by fiscal year 29, growing at around 15 to 17% CAGR, which bodes well for all health insurance companies. In context, GDPI is the total premium received from direct business written for a relevant fiscal year. Now coming to the financials, Niva Bupa has demonstrated consistent revenue growth and recorded revenues of 4,118 crores, growing at a CAGR of 47.8% over the 2-year period. When looked at the bottom line after making losses in fiscal year 22 of 196 crores, it has made a turnaround and delivered profits in fiscal year 23 and fiscal year 24, registering 81.8 crores in fiscal year 24. When we look at the net worth, which represents the total value of its assets minus liabilities, a key financial indicator of financial health, it stands at around 2,049 crores. Lastly, the borrowing has been steady at 250 crores. Now let's get into some finer details and reflect on the key performance indicators of Niva Bupa. The retail health gross written premium or GWP has shown a consistent growth with a market share of 9.1% as of March 2024, indicating a strong presence in the health insurance sector. Assets under management or AUM and net worth have significantly improved to 5,458 crores and 2,049 crores respectively, reflecting strengthened financial health. The return on net worth, though positive in recent years, shows variability, highlighting some profitability challenges. The claims ratio and expense ratio have remained steady, indicating controlled costs related to claims and operations. The combined ratio close to or slightly below 100 suggests the company is managing its costs well relative to earned premiums. A high retention ratio around 78 to 79% indicates strong customer loyalty. The solvency ratio above 1.5 times in recent years signifies that the company maintains adequate financial reserves. Talking about policy details, the average ticket size per policy and GWP per policy sold by agents have been stable. Lastly, talking about network and claims, Niva Bupa has a large network of over 10,000 plus hospitals, and a high percentage of claims are settled through cashless facilities, improving convenience for policyholders. The claim settlement ratio, about 90%, shows consistent, reliable claim processing. Now moving on to peer comparison and valuation. Among the listed peers, Niva Bupa is one of the smallest players in terms of net profit. In terms of valuation, with an upper price band of 74 rupees per share, the price to earning ratio stands at 148 times, while the industry average stands at 38 times. So as per the industry average, Niva Bupa is slightly on the expensive side. Now coming to our last segment, with the strength and weaknesses. Let's start with the strengths. India's rising middle class and increasing awareness of health insurance are driving market growth. Coupled with government initiatives and favorable demographics, it is further boosting the sector. Niva Bupa enjoys a strong brand reputation and customer trust. The company has a wide network of healthcare providers and hospitals. Then Niva Bupa has embraced digital technologies to enhance customer experience and operational efficiency. This digital focus positions the company well for future growth. Lastly, let's talk about the weaknesses. The health insurance sector is heavily regulated, and changes in regulations could impact the company's business. Regulatory scrutiny and potential penalties could pose risks. Second, the Indian health insurance market is highly competitive with numerous players. Intense competition could impact pricing, market share, and profitability. Third, while Niva Bupa has a good claim settlement ratio, maintaining it at a high level can be challenging, especially in a growing market. Adverse claims experience could impact the company's financial performance. Lastly, Niva Bupa relies on third-party service providers for various operations. Any disruptions in the services provided by these third parties could impact the company's business. Now that you have a comprehensive understanding of the company, make an informed decision. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.